Hello everyone, welcome back to Investors Meeting Point. Man Industries reported consolidated Q1 financial year 27 revenue of Rs 10,531 million, representing a strong 41.9% year-over-year increase. Although it was below the market estimate of 12,801 million, the quarterly chart also shows revenue moving from 7,421 million in Q1 financial year 26 to 10,531 million in Q1 financial year 27. So while the quarter missed expectations, the underlying year-over-year growth remained very strong. For investors, the most important signal is that this revenue growth was accompanied by much stronger improvement in profitability. The strongest Q1 signal comes from EBITDA. Consolidated EBITDA increased from Rs 491 million in Q1 financial year 26 to 1,434 million in Q1 financial year 27, representing an impressive 192% year-over-year growth. EBITDA margin simultaneously expanded from 6.6% to 13.6%, a 700 basis point improvement. The report attributes this strong performance for a better product mix. This indicates that profitability is improving much faster than revenue, creating a strong foundation for the earnings outlook. The improvement is also clearly visible at the bottom line. Q1 financial year 27 profit after tax increased from Rs 276 million to Rs 614 million, representing 122.5% year-over-year growth. PAT margin improved from 3.6% to 5.8%, an expansion of 220 basis points. The quarterly chart shows profit after tax accelerating sharply compared with the previous year quarter. This combination of strong PAT growth and margin expansion provides an important positive signal for the company's earning trajectory. The forward revenue chart presents a strong growth trajectory. Revenue is projected to increase from 35.6 billion in financial year 26 to 51.2 billion in financial year 27 estimates, Rs 67.9 billion in financial year 28 estimates, and 80.2 billion in financial year 29 estimate. This represents a projected 31% compounded annual growth rate over financial year 26 to financial year 29 estimate. The report also notes that the company has Rs 36 billion order book and Rs 240 billion bid pipeline, providing a multi-year visibility. Management has reiterated financial year 27 revenue guidance of approximately Rs 50 billion. The EBITDA outlook is even stronger. EBITDA is projected to increase from 4.4 billion in financial year 26 to 7.3 billion in financial year 27 estimate, 10.0 million in financial year 28 estimates, and 12.3 billion in financial year 29 estimate. The chart highlights an anticipated 41% EBITDA compounded annual growth rate over financial year 26 to 29 estimates. At the same time, EBITDA margin is projected to improve from 12.3% in financial year 26 to 15.3% by financial year 29 estimates. The reports identify higher value-added product mix, scale benefits, and operating leverage as key drivers for this margin expansion. Man Industries has delivered a particularly strong profitability performance in Q1 financial year 27. The immediate revenue miss is outweighed by 192% EBITDA growth and 122.5% profit after growth and a powerful financial year 26 to financial year 29 estimate earnings trajectory. With a buy ratings and Rs 800 target price, the stock presents an attractive long-term growth opportunity. Thank you for sparing your valuable time. Thank you for listening to this video. Happy investing.